and welcome. This is Mary Ellen McGonagle with Chartwise Women, the weekly show where normally Erin and I share with you our wealth of wisdom, and as always, with an eye toward educating and empowering you. Again, as always, with an eye toward helping you outperform these broader markets. And certainly we are in an interesting period here. I obviously, as many of the contributors for StockCharts.com, and very, very close to the markets, screening regularly. I do have a biweekly MEM Edge report that delves very much into the markets as far as what's currently taking place and my outlook. And as such, feeling that a lot of people are on vacation. Erin is not the only one. The markets are being pushed around quite easily, but today we are going to be focusing on an area that could potentially help you buffer that volatility that is some people or traders are calling for that volatility to potentially continue through the summer months as a lot of people take a break and volume levels decline. So we're going to be talking about yield stocks, those stocks that provide a nice dividend, but we're going to also boost those dividend with other characteristics. So let's go ahead and get started. I'm going to share with you my wisdom of the week as it relates to this topic. And as it states, when you are looking for these yield stocks, if you have a really set sound strategy where you are combining revenue as far as growing revenue, earnings, and dividend growth potential, this strategy will definitely boost your returns. And one of the primary reasons is because if the company is growing, they are seeing revenue streams improve as well as earnings that will allow them to potentially increase the dividends. And you want to see that, of course, but more importantly for my work, when you're looking for stocks that are poised to trade higher, you want to see those high earnings and revenue characteristics as well. So that's what I am going to be sharing with you today. We are going to take a look at stocks that look attractive. But before we do that, let's go ahead and take a look at what may be driving a move that I'm seeing into some of these higher yielding stocks. I'm going to go ahead and share with you a look at the 10-year Treasury yield. That's become a benchmark here of late when you're looking at interest rates. So we can see with this yield, it is continuing to drop rather significantly. We're back now to these February levels, and it's all about high growth and inflation. We can go back to this beginning of this year into April, and we did see quite a significant uptick in yields in interest rates. And that was all about fears. We were getting a lot in the way of strong economic numbers, and it really hit growth stocks the hardest. These growth stocks do not fare well in a rising interest rate environment simply because those rising interest rates will erode their future growth, the value of those future growth. So we can see a significant drop here. So those that generally would potentially look to the bond market for higher yields to incorporate within their portfolios, we're here today to talk about using these higher yielding stocks as an alternative. And most part, these higher yielding stocks are going to be potentially less volatile. So also as a way to buffer your portfolio. So let's go ahead from here. And what I'm going to be sharing with you is high yielding stocks. And I'm going to go ahead and sort that list by these various sectors because you want to make sure, regardless of whether it's high yielding stocks or stocks in general, you do want to have that wind behind your back and want to make sure that the industry group that you are seeking or looking to participate in is in an uptrend. So then from there, what we can go ahead and do is take a look at some of the stocks within those industry groupings. So let's go ahead and get started. I do have some preset screens here for us that we can take a quick look at. And first up here is real estate stocks. These are going to be REIT stocks. And let's take a look. And actually, let me see if I have as always, I am just going to take a quick second here and I want to share with you a look at the broader markets. And when you're looking at these industry groupings, you'll have a better sense of what we are comparing it to. This is the S&P 500, and we did hit yet another new high, inched up to new highs yesterday and pulling back today. And in overall, the reasoning there is because the strong growth that was so fearful and in the markets is not quite as evident. We got employment numbers today. They weren't horrible, but they did show just a little uptick in unemployment claims. But in essence, globally, there's just a kind of a move away from that concept that we are in a super high-powered growth area. So the broader markets are pulling back. But let's go ahead and take a look again at this REIT industry grouping. Super healthy. And as some of you may know, real estate investment trust stocks, they are required to pay out at least 90% of their income as dividends to investors. So it is really ripe with a number of stocks, but more importantly, let's go ahead back to this grouping. We can see that it did hit a new high in mid-June, pulled back. We are poised to hit another new high. And I have some outside momentum indicators here as well. The RSI in a nice uptrend, and also your MACD, that's a moving average, convergence, divergence, appear in positive territory. And what we want to be on the prowl for here is a nice crossover, black line up through the red. Quite simply, that is telling you that this period of consolidation has reversed and the real estate investment trust stocks would be poised to trade higher. Also bullish, this potential base breakout. We're about a hair away from a 1-month base breakout. And you can see historically going back into May, that base breakout was the beginning of another leg up. So as you can see, bullish on the industry group. So let's go ahead from here. I'm going to share some various names in the REIT space that are offering very nice yields, but also have constructive growth prospects as well. First up here is Crown Castle. Ticker symbol is CCI. Company offers a 2.7% yield, and this particular company is all about the growth or the expansion of 5G throughout the US. They actually are an international company, so it's elsewhere as well. They own wireless towers, which they then lease out. What I did want to point out to you here is the fact that the stock is poised to break out of this nice flat base. Now, this is in line with the industry group, which pulled back, but CCI did not. It's in a back and fill position. We are seeing it break out today for yesterday, very constructive. Take a look, this MACD, we're poised to have that black line up through the red. Again, we can use historical precedents of that base breakout back here, MACD crossover, indicating another leg up. So this, I feel, is a very, very strong candidate for those looking to, again, buffer volatility, take advantage of these higher yields. Let's look at another stock in this REIT space. This is Public Storage, PSA. The stock has really been unstoppable, taking us back to this March period. They do own and operate facilities that allow you to store your furniture, any goods really. And the company offers a nice 2.6% yield. This is another stock that is breaking out of, in this case, a 2-week base. We can see the stock is overbought, but historically it has been able to remain in that overbought position and continue to trade higher. And this is all about the pandemic, individuals that were living at home, moving out, people moving to really just a lot of movement as far as housing. So a number of people are storing their excess goods in these storage units, which is really helping to improve growth. Another REIT stock, and this one's a little more technology related, it's called Digital Reality Trust. I'm pointing this one out simply as a turnaround potential candidate. It's a 3% yielder. This company deals and owns a number of data centers. I'm going to pull up a little bit of a longer chart here. And we can see that the stock peaked in price back here at the end of June, came out of a very multi-lengthy base, but pulled back. So in essence, really needed to digest that significant move. So since then, we've had a nice double bottom formation as the stock is now reversing that downtrend. So a couple of characteristics to pay attention to here. The RSI is now turning positive. That's very constructive. We can go back to this downtrend reversal period as precedent. And then your moving average convergence divergence. Once this black line crosses up through the red, you will be in good standing once we break up above that 21, but really setting up quite nicely. It does offer a 3% yield. Among their customers, DLR has IBM, Facebook, Oracle. They really are the bellwether data center, all about cloud computing. So I did certainly want to point that particular stock out. One last one here in the REIT space, and this is a company that deals with apartment communities. They have 272 apartment communities across the US. This is all about the reopening of the economy. They've been able to regain, as there was a period where individuals were not paying rent because of the pandemic and unemployment, but that has entirely shifted. So now we have the stock poised to break out of a nice base. Take a look, black line poised to cross up through the red and positive RSI. So from here, what I did want to do is take a look at an industry grouping that is a little bit different, but equally constructive. I'm going to share with you the group chart first. As mentioned, we want to make sure that that industry group is actually looking somewhat constructive. And in fact, it is. This is XLV, the healthcare sector. And healthcare really has picked up quite a bit here. One of the drivers originally was Biogen's the FDA's approval of their Alzheimer's drug, and that really got people really reignited and re-engaged with these healthcare stocks as FDA approvals, potentially driving growth for a lot of these stocks. So what I wanted to do from here is go ahead and share a couple of well-known healthcare stocks that really look constructive, but also offer that nice yield. So first up is Johnson & Johnson, J&J. Company's on track for 19% year-over-year growth, and that's a big number for such a large company. Let's go ahead and update it here, and we can take a quick look. I did want to share with you where you can get that yield information up here. The annual dividend is 4.09, but that yield is 2.4%. And so from here, what I did want to share with you, this is a company that I wrote about last weekend in StockCharts.com's Chart Watchers article review. And this turnaround here has a lot to do with the need to globally distribute the the vaccines. There is a fear out there with that Delta variant of the COVID-19, and J&J is at the forefront there. So we can see it had a nice downtrend reversal. This is last Friday's action where it broke back above each of these shorter term simple moving averages. We can see the RSI here nicely in an uptrend. And then take a look, that MACD had that crossover, and we are currently in positive territory. The stock is really ignoring the market dynamics and is definitely appears poised to trade higher. Let's take a look at another well-known, it is an international company, but ABBV. This is AbbVie Inc. And it's viewed as a biotechnology, but it's also a hybrid in the sense that it's in that big pharma space as well. Take a look, big yield here. And I had 4.5, but we're showing 4.3% yield here. And this particular stock is poised to break out of a nice multi-month base, this nice double bottom formation, and then your outside momentum indicators are constructive. The company, AbbVie, did purchase Allergan, and they're really seeing some nice boosting to their revenue. Talked about you want to see that growth. The company's on track for 19% earnings growth. And again, that Allergan company merger is finally, as far as taking shape. They do sell Botox as one of their top products, but they are seeing the results of that. So a nice healthy chart and healthy fundamental backdrop. Another big known healthcare stock, Eli Lilly. So this stock we can see is in a very nice confirmed uptrend. Yield not quite as dynamic, 1.4%, but the company did see this gap up here recently. They got FDA accelerated approval of their Alzheimer drug. This is after this boost here was when Biogen got their approval. So Eli Lilly on that big advance broke out of a base and remains in a very nice uptrend. One last name that we can look at here in healthcare is Merck. And this is another company, a little bit of volatility here. I'm not quite sure I would be as attracted to this, but currently it is in a nice uptrend, 3.3% yielder. And also their big drug is Keytruda. It is a cancer oncology medication, and their Keytruda already had been approved, but they're continuing to see approval for different variants of cancer, most recently this week, advanced skin cancer. So Merck in a very nice uptrend, poised to break out of this 6-month base above 80, which would be even more bullish for the stock. So we're going to take a brief break here. I have one other industry group that I can share with you, actually two more, and so lots more to cover. We'll be right back. And we are back. I did want to share with you some names in an additional industry group here. We're looking at a daily price chart of industrials. So let's examine this chart closely, because industrials are part of that cyclical industry group that really performed well year to date. A lot of stocks here that are very much participants in this reopening and the economic growth that is really taking place globally. So what we're seeing here is that the industrial sector did fall out of favor. And this is during this period when we did see, as far as interest rates, continuing to decline, and then that reopening trade, we did have a move to growth stocks. So industrial stocks did begin, in fact, even yesterday, to poke back above these simple moving averages. There was a sense that we could see a re-emergence of this upside here on industrials, but it is faltering today as that global growth concept is is fading currently. So on the lookout for this industry group to come back into favor. But That being said, I am going to share with you a couple of names in this industry grouping. And of course, when that group comes back into favor more constructively with a break back above these moving averages and more positive momentum indicators, I would be more bullish on these industrial names. But first up here is the company Fastenal, F-A-S-T, and I'm going to pull out a longer chart here just to show you that it does have this potential upside here. And this is going to be in addition to that nice 2% yield. The company does have construction supply stores throughout the U.S., and we can see it's poised to break out of this multi-month base. The company has been on a growth track here. So if we can see a break up above that 54 level, we can see that the outside momentum, this MACD, had that crossover and just this week broke back above 0. So I would keep this on your radar. One other name that's in the industrial space. Now, this is more about human resources. They provide outsourced services for that. And we can see as the economy, as people are getting back, unemployment is dropping. There is an increased need for their software, which actually is in the industrial space, a nice 2.3% yield, and the stock's in a very nice uptrend. You can see that there's not a whole lot in the way of volatility, where by and large, you're just in a nice general uptrending period here, and you are being offered that nice yield. Another industrial stock that does provide waste management, and that is the name of the company. It's WM. And we can see that waste management, this is an industry that's not going away. It did have a little bit of a pause here, but that's all about digesting this very significant move where the stock went from 110 up to 142. So we very naturally, this is what you're going to see. These stocks aren't going to head higher forever. So we had a very nice period. Nice. If you owned it, you wouldn't be too thrilled with it, but just a natural period of consolidation. And then just this week, we are breaking out of that consolidation period. Your outside momentum indicators are positive. We're just getting that nice crossover here on the MACD, nice upside potential. So this stable business does offer a 1.6% yield in that industrial space. Now let's go ahead and move on, take a look at an industrial stock. This is Northrop Grumman NOC. A little bit dicey action here of late, but it is another stock that had a significant move from this March into the end of May. So this consolidation period, this does kind of blight the picture just a little, but if we can get NOC back above these prior highs at about 378, and then this momentum indicator more constructive, we want to see that black line up through the red. So we're not quite there yet, but we are awfully close on NOC. They offer a 1.7% yield, and they are a defense company that does come up a lot in that space area as well, as far as tourism to into space. They're involved in that area. So nice company with strong growth prospects. Last up here in the industrials is Eaton, ETN. The company is based out of Ireland, but a nice 2% yielder, and they are involved in power grid controls. 2% I mentioned yielder, but the growth on 42% earnings growth. And this is another just nice, steady, uptrending stock. We did have a nice base breakout last week that the stock is retaining. So very good standing there. And I'm not sure if we have time, but I'm just going to share with you one other industry group that then from there we can just look at one stock. The industry group is not looking very constructive. This is a cyclical basic materials. So we can see that in line with the cyclical stocks faltering, not very constructive. So I'm just going to show one Brazilian miner, but it's in line with that industry grouping. So, but it does have a 7.2% yield. I think we'll pass on that basic materials area because it's just not looking very constructive. But let's go ahead. We have one last segment that is always a lot of fun that we do each and every week. And it's called Yeah, That Happened, where we scour the globe for interesting headlines. There's always something interesting happening. This one was brought up by our producer, Eric. He's has an in on these funky headlines. So today's article is all about a church in Florida where an alligator, there's a video that shows the pastor speaking to this alligator that was walking near his church, and he was encouraging the alligator to come in and join the services, get religious, if you will. So interesting. So from here, I do have a couple of names that I can share with you. They're not all looking fantastic, but as far as a theme, I am sharing with you stocks that have they're biased as far as also having a kind of a religious bend, if you will. You may not know this, but first up is Tyson, TSN. So in line, it does offer a nice 2.4% yield. This is all about, there had been a shortage of chicken. Tyson Foods does a lot in the way of producing and distributing chicken related products. And since then it has fallen out of bed. And I promise you, I should have looked closer at this chart before even bringing it up. But now that we do have it, we can point out stocks that you don't want to own in the sense that it has broken down below. Once we see a break below that 50-day simple moving average on volume, and then in addition, your outside momentum indicators breaking down below 50, heading lower, and your MACD just kind of languishing down here. At some point in time, anticipating a turnaround because we did get oversold, but we're not quite ready yet. It's going to need to break back above this red 50-day at 77. So maybe keep this on your radar. The company actually has a chaplain program. They provide pastoral care for team members and their family. It's actually a very, very big program. The company is all about having core values and helping people in times of need as far as with these on-staff chaplains that are there to help. Let's take a look at an ETF that offers a nice 1% yield. This is Catholic Values ETF. This particular company is involved. Their stocks are all about information and technology. So we can see just a nice general uptrending period here as this ETF is heading upward. And then one last name is a company called, well, it's Alaska Airlines. I'm sure we're all familiar with this, but this is another stock that's not quite ripe. But I did find it interesting that for years, the company handed out prayer cards with their food trays. This did stop about 9 years ago, but it was something that they did for many, many years. They've got tons of great publicity, not publicity, but a lot of compliments from travelers that thought the cards were a nice touch. But the stock definitely is in a downtrend in line with a lot of airline stocks, not quite ready for prime time. We're going to want to see a break back above these moving averages to signal Alaska back into an uptrend. So that's it for this week. Everyone have a great weekend, the rest of your week, and Aaron will be back. We'll see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.